Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Alphamab Oncology Annual Report. Alphamab Oncology is a biopharmaceutical company that specializes in developing biotherapeutics for cancer treatment in China. The company offers several products and services, including the company's product pipeline includes KN35, an injectable PD-L1 inhibitor for treating advanced solid tumors, KN26, a bispecific monoclonal antibody for HER2-positive breast and gastric cancers, and KN46, a bispecific immune checkpoint inhibitor for non-small cell lung cancer and other types of cancer. Additionally, the company is developing JSKN3, a biparatopic HER2-targeting antibody drug conjugate for treating various solid tumors. The company's pipeline also includes JSKN16, a bispecific ADC for advanced malignant solid tumors, lung cancer, and breast cancer, KN19, an immunosuppressive agent for preventing organ rejection in kidney transplant patients, and JSKN33, a subcutaneous AG for HER2-expressing advanced or metastatic solid tumors. Furthermore, the company is developing several preclinical stage products for oncology applications. Alphamab Oncology's product offerings can be categorized into several areas: antibody-drug conjugates ADCs, bispecific monoclonal antibodies, and immunosuppressive agents. The company's ADCs include JSKN3, JSKN16, and JSKN33, which are designed to target various types of cancer cells. Its bispecific monoclonal antibodies include KN26 and KN46, which can target multiple cancer cell receptors simultaneously. Finally, the company's immunosuppressive agent, KN19, is intended for preventing organ rejection in kidney transplant patients. Overall, Alphamab Oncology's product pipeline includes a range of innovative therapies for various types of cancer, as well as an immunosuppressive agent for preventing organ rejection. Alphamab Oncology market capitalization of $7 billion is materially smaller than most of its industry peers of roughly $26 billion. Alphamab Oncology trades at a higher price-to-book ratio of 3.73 times relative within the industry. While the stock does not screen as absolutely cheap, mixed valuation signals relative to industry peers prevent a definitive conclusion. With the broader industry trading at lower valuation levels, this may reflect transitional pricing dynamics rather than clear mispricing, warranting further analysis of earnings quality, growth sustainability, and balance sheet strength. The balance sheet appears very conservative, with liabilities representing only 18% of total assets. While this indicates low financial risk, investors should examine the composition and quality of the company assets to determine whether they justify the current valuation. Average liabilities have declined over the past 5 years, indicating improving balance sheet discipline and reduced financial risk. Shareholder equity has declined over the past 5 years, but operating income remains positive. The equity weakness may stem from capital structure changes such as buybacks or dividends rather than operational deterioration. The share count has increased over the past 5 years, while revenue has continued to grow. This suggests the business may rely on shareholder dilution to fund expansion. Investors should closely monitor whether growth can eventually be sustained without dilution. The income statement shows that the company have been growing its revenue annually, but the operating income have not been increasing. This shows that the business is under pressure with rising cost. The primary drivers of revenue growth or decline can be identified through a review of the company's financial performance. On the one hand, revenue growth is primarily driven by milestone payments from license fee income, which increased significantly in 2025 compared to the previous year. Additionally, the provision of goods and consumables for R&D projects also contributed to revenue growth. On the other hand, revenue decline was largely attributed to a decrease in sales of pharmaceutical products and royalty income, as well as a decline in license fee income. Furthermore, other income also experienced a significant drop from RMB 62 million to RMB 52.8 million. These factors collectively contributed to the overall decline in revenue. The company's financial performance indicates a strong ability to generate cash. According to the provided information, the company is indeed producing positive operating cash flow. This is evident in the statement on page 39, which explicitly notes operating cash flow positive. Furthermore, it highlights an instance where the company received net proceeds from a top-up placing that were fully utilized, demonstrating its capacity to effectively manage and utilize available funds. The company's debt level and interest expenses have undergone significant changes. On the one hand, the trade and other payables increased by 30% from RM 80.8 million to RM 35.5 million. Lease liabilities also rose by 16% from RM 3.7 million to RM 4.3 million. However, contract liabilities decreased by 34% from RM 40.1 million to RM 26.4 million. On the other hand, bank borrowing saw a substantial decrease of RM 63.5 million, or 35%, from RM 82.2 million to RM 18.7 million. Non-current liabilities also declined by 33% from RM 55,827 to RM 5,324, with bank borrowings decreasing by 34% from RM 29,982 to RM 85,220. In terms of interest expenses, the company experienced a decrease of 25% from RM 9.9 million in 2024 to RM 7.4 million in 2025. However, there was an increase of 4% in interest expenses when including interest capitalized in CIP, resulting in a total of RM 10,317. Management is expressing optimism regarding the company's future prospects. This confidence stems from a proven track record of innovation through research and development efforts. The company's exclusive technologies, platforms, and specialized knowledge are also contributing factors to this positive outlook. There is no significant activity to report on acquisitions and divestitures. The company has not made any notable purchases or sales of assets, subsidiaries, or businesses that would impact its operations or financials. As a result, there are no changes to report in this area. Concerns have been raised regarding inventory buildup in recent years. The issue of inventory buildup is explicitly mentioned on page 14 as a yes, indicating a clear acknowledgement of the problem. Furthermore, data from page 31 reveals a significant increase in inventory levels between 2024 and 2025, with numbers rising from 41,662 to 88,842. This substantial jump suggests that inventory buildup has become a pressing concern, potentially leading to supply chain disruptions if left unaddressed. That concludes the financial summary for Alphamab Oncology. Feel free to comment below, and I will be happy to answer them when possible.